Michael Burry just bought $4 million worth of puts in the market. I'll go over his most recent buys and sales. He also has bought some specific stocks, which I want to cover and let you know today. Also, in the later part of the video, I will go through his historical performance in terms of, calling out massive drops in the market. Obviously, he was massively right in, the early 2000s with the whole mortgage bubble. But now I will dive into his recent moves. So he bought $2 million worth of SPY puts. He also bought $2 million worth of QQQ puts. So he's bearish on the SPY and the tech sector, if you will, with the QQQ. So obviously, he has been one to call out some pretty aggressively, if I could say, call out massive pullbacks in the market. That's kind of been his thing since he's been in the market. That's kind of what he's known for, is calling market drops. So he's predicting one here again. But let's take a look at some of his portfolio buys. So he bought Expedia in Q2 of 2023, so just last quarter. Then he also bought Charter Communications. This is a new holding for him. He's up 23% in Charter Communications. He's also up about 10% in Expedia. And he also sold out of his Alibaba and JD.com holdings. This is a very interesting move for him because he actually had just bought this position in Q1. So he's selling out for a small loss in Alibaba, and he's also selling out for a larger loss in JD.com. You can see he was buying over the past 2 quarters, but he's recently just thrown in the towel on this position. Also, in Capital One, he sold about 75,000 shares, his entire holding. So once again, here, he's kind of selling a position in which he had bought the prior quarter. And then once again here, he sold out of New York Community Bank Corp, but he added CVS after selling for a profit back in 2021. He's buying back into CVS. Currently has a 6% loss on that position. And then in Zoom, he sold out of his Zoom holdings as well. And this was a position that he had bought in Q1. So really a ton of turnover. He's kind of selling out of a lot of his holdings that he just recently had bought in. And then BetMGM is a new position for him. This comes after he sold out of his shares in Q1, so he's buying back here. And then Generac Holdings, he bought. This is a new holding for him. He hasn't owned this stock in the past couple of years. And then Western Alliance Bancorp, he has sold out of his holdings there. Unfortunately, he bought kind of right before the drop. So sadly, he is selling out for 21% loss. And then Lardio Petroleum, he bought this one. Is basically kind of flat on the holding. And then Stellianis, he had bought here. He bought about 325,000 shares, and this is after he had sold for a loss in Q3 of 2022. Wells Fargo, he sold out of his holdings. And then Warner Bros, Warner Bros has actually initiated a position of 375,000 shares. And then next here, Oilfield Solutions, he has bought in for the first time for 400,000 shares. And then Star Bulk Carriers Corp. So a lot of value names is kind of what he's buying here. And then Signet Jewelers, he sold out. Crescent Energy Holdings, just Crescent Energy Co. He bought in there. He holds a 27% gain. So he did a lot of buying in the energy sector and kind of the value sector of the market. Trying to see if there's anything notable here. And then Haynes Bros, he bought in Common Stock, Next Star Media Group, Devon Energy sold out of, Liberty Latin, NOV, Oil and Gas. Huntington Bank shares, he had sold out of his holdings. So he basically is completely out of the banking sector. PacWest Bancorp sold out there. Geo Group, he had increased his holdings by 50%. Costmare, deep sea freight transportation. See, he's kind of getting into these value areas of the market. That's a common theme of his recent moves here. And then BlackRock, institutional trust company. So he bought into a Japan small cap ETF, bought into another Japan ETF. So he seems like he's going kind of headfirst into the Japanese stock market. And then Cigna Group, he increased his holdings by 10%. And then once again, Japan ETF, he's kind of going pretty heavy into that market. Then Sea Bulkers, once again, deep freight transportation, value name, new holding there. Once again, another Japan ETF, so he's very bullish on the Japanese markets. So that is all of his new and updated trades for Michael Burry. But then let's take a look at his sector breakdown. So what sectors is he bullish on? So currently he has about 32% of his portfolio in consumer discretionary, 17% in telecommunications, about 12% in energy, 10% in industrials, finance about 8%, other about 6%, healthcare 5.8%, utilities 4%, and technology 4%. So this tells you that he's pretty bearish tech, right? He pretty much rotated all of his holdings out of tech and into more value names. That's kind of the common theme within his moves over this past quarter. But let's take a look at his historical performance. So over the past 10 years, he has outperformed people like Warren Buffett and Cathie Wood. That's just a fact, and one I thought that was pretty cool. So over the past 10 years, he has a 305% performance, which is massively outperforming pretty much every other asset manager. So he's got a pretty cool track record. And then over the past 5 years, he's had 186% gain. And then over the past year, he's had about a 14% gain. And we can see here that his portfolio value has kind of, waxed and waned here a bit. And then we can see that overall, he actually did buying in Q2. So he's not as bearish as people would really say. But when you look at what he's buying, you gotta consider 4 million of the buys here are actually puts. So obviously that's bearish, and he's kind of rotating out of risky parts of the market and rotating into very safe names like those transportation stocks, like those oil stocks. So yes, although he put more money, he put new money to work in the market, yes, but he's rotating capital into areas that are kind of not as that are not really economically sensitive, right? They're names that are really going to do well in a market that would be down, right? So he's rotating into those value names, into those safer companies. So interesting stuff here. And then we take a look at his biggest wins. I always like to do this with whenever I kind of go over someone's personal portfolio. So his biggest win in his history is Apple, actually, with a 510% gain. He sold in 2016, though, so I'm sure he missed out on some gains there. Michael's Companies is one of his biggest gains at 364%. Maxar Technologies, 340%. GameStop, he made a ton of money in, 325%. So he's definitely one that has had some crazy gains in his history. But he's had some crazy losses too, so let's take a look at them. So, Pen Path and Beyond is actually his worst trade in history. I thought that was kind of funny. And then First Republic was one of his worst trades. Community Health Systems, one of his worst trades. PacWest, one of his worst trades. So he's had some great ones, but he's had some poor ones as well. But speaking of kind of his historical performance, let's take a look at his calls since 2005. So obviously he hit the subprime mortgage crisis out of the park. And then he made another big call in 2019 with the index fund bubble, is kind of what he was calling it. That didn't really play out like he thought it would. And then in April 2020, he said inflation was set to rise. I think a lot of people would have said that. He was obviously very right about that. And then in 2020 of December, he said Tesla stock was about to plunge. Obviously, a swing and a miss there. And then in February of 2020, in February of 2021, he said market was on the brinks of collapse. And to be fair, if you give him like 12 months, he would have been right on that one. But he was obviously a little early. And then he also called the inflation peak in June of 2022. He said inflation was about to peak. He was correct. And then in January of 2023, January of this year, he said sell the market. And obviously, we've had one of the best first halves in history for the market. I think it's the best first half since like the 80s, if my memory is correct. So he kind of kind of a swing and a miss there. And now once again, he's saying, he isn't saying it publicly, but his portfolio is saying, sell the market, be bearish on the market. So another call from him here today. Let's see how this plays out. Very interesting to kind of have this extremely influential and very, successful trader, right? When we take a look at his performance, he outperforms many people, right? So his 10-year performance is 305%. That's nothing to sneeze at. And we'll compare it quickly here to others. So Warren Buffett here, his 10-year performance is 174%. So don't be discounting this guy like many want you to. So 174% from Warren Buffett, and then from Cathie Wood, 95%. So who really should we be listening to here? The numbers would imply it's Michael Burry. So that's why all of these portfolio moves from him are very important, and I thought it would make a lot of sense to give you a video on this. So I hope you enjoyed the video. I will end it there.